Welcome into a brand new episode of WSI TV. Enjoy the show.
Welcome back into another brand new episode of Bishop's Move here on WSI TV. I'm Jordan Bishop, and I'm joined today by Leah Warren. How are you doing today, Leah?
I'm doing great. How are you, Jordan?
Good, thanks. So let's jump into the topic of the day. We're talking about following the money. First and foremost, make sure you go to WSITV.com, sign up for the free daily newsletters. You'll also get free access to the WSI Vault. So Leah, why don't you kick us off with the topic of today?
Yeah, so like you said, we're talking about following the money. The state of the market is not great. There's been a lot of suffering as a reaction to the coronavirus. And as we've said, the catalyst may be the coronavirus, but the real cause isn't the virus itself. It's the ripple effect that it's causing, where things are shutting down, travel's on hold, and a lot of sectors are very severely affected by this. The biggest ones are retail, entertainment, and manufacturing.
Right.
For obvious reasons. So we'll get into that a little bit.
Yeah.
So the most heavily affected sectors are affected for very obvious reasons, as I said. With entertainment, it's pretty easy to figure out. People aren't going out. People are staying home.
Canceling festivals, canceling get-togethers, conferences, all that stuff.
Canceling sports. Just everything's being canceled. I heard this morning that Ireland is officially shutting down any kind of gathering over 500 people.
Oh, wow.
So people are just generally being very much on the safe side with this.
I'd say too safe.
A little bit. A little bit of an overreaction. But because of that, amusement park numbers are down, theater patronage is down, just general shopping numbers are down, which leads us into retail. People aren't going to malls. People aren't going out to shop. People are even worried about ordering things because they're afraid that those shipments are going to be contaminated. All of these fears are overdone. It's an over-exaggeration.
Yeah. And as you said, it's having a ripple effect on the market. And the problem is, we keep saying this, it's an overreaction, but it does have real economic implications, doesn't it, when it gets to this point? I mean,
Absolutely.
If people, the economy, it needs flowing money through it, right? And what I don't want to say the R word, right? Recession, because we're not there yet, not really close even. A recession is defined by two shrinking quarters, technically. But what causes a recession is the slowdown of money movement.
Yes.
And if people aren't spending money, I mean, it could be a self-fulfilling sort of paradox here where we drive ourselves into something that we really don't need.
Absolutely. And because of that, we are starting to see that. Hopefully it'll turn around. The numbers of infected people in China are down, so it's working its way out.
Right.
It'll end eventually, but while we're in the midst of it, these sectors are being severely affected. One of the biggest ones is manufacturing. And this is because, one, people aren't shopping for the finished goods that are created for manufacturing. And two, some of the biggest manufacturing plants in the world are in China, and everything is still shut down in China. So.
Right, yeah. It's almost like Trump got the outcome of the trade war without an actual trade war, I mean, so we're turning to American manufacturing, American and Irish, UK, things that are a little closer to us.
Non-Chinese, just because that sector is still shut down. But there are other manufacturers that are still running because they're not in the midst of that shutdown.
Right.
As it stands right now, this issue is likely to snowball more rather than melting away. The virus is going to keep spreading. People are going to keep having travel bans and staying in their homes. We're going to see it get worse before it gets better. And these sectors will continue to take a hit, which will lead the market to take a hit, as it has already started to. But despite this, the market will recover. It always does. That's just a fact of life. There's the ebb and flow. And then there's always going to be sectors that are succeeding no matter what the general market is doing.
Absolutely. And one thing, too, is, once Chinese factories reopen, they're going to want to catch up with production, right? So that means more jobs. They're going to employ more people. It's like this needs to happen in economies. I mean, it's very sad. And, hopefully as many people in the world get through it financially and they're even they're in regards to their health. But the economy should bloom out of this, There should be a pickup in work. There should be, unemployment's probably going to rise a little bit in the next coming months, but it should drop way back down once we get back into the swing of things.
No, absolutely. And that's, again, that natural ebb and flow. We're in the part of it that kind of sucks, but we'll get through it and it'll get better.
Yeah.
But no matter what, the money is going somewhere. And it may sound counterintuitive when we've said that manufacturing is taking a hit, but that money is just going to a different avenue of manufacturing. Like you said, where China has shut down and manufacturing there is on a standstill, that's given other manufacturing plants and companies throughout the world, other than in Asia,
Right.
the chance to blossom and kind of take over that empty space. And because of that, we've seen some really great jumps in manufacturing in other areas.
Yeah.
So we've actually got a couple of those charts for you today.
Yeah, absolutely. And just before we get to that, I mean, if manufacturing's slowing down from where we usually get it from, it means it's picking up somewhere else because
Exactly.
there's still necessities, there's still things we need sent over. It's funny though, you know, I was talking to somebody the other day who was trying to order AirPods, the iPhone headphones, and they were out of stock because they weren't being sent over. So I'm sure there's a stockpile in China, you know, that they're ready to ship. It'll probably lower prices for some things as well once they get here.
Yeah, and it's that there's a lot of that. There's I know that iPhone in general has been having issues with that. Apple in general has had lots of stockpiled stuff that's already been made that's in China,
Right.
but it can't
They
make
just
its
can't
way
get it
over
out,
here. But because of that, other people are stepping in, other companies are rising up, and China will recover, and all the companies in China will recover once this passes. But in the meantime, this is giving away to a bunch of other companies,
Right.
making their mark in the industry.
Yeah.
So the first chart that we have for you is Train Technologies, which is actually an Irish industrial manufacturing company. They work throughout the US, the UK, and the EU. And they've seen a pretty big increase over the last 3 years.
Yeah, I mean, what a clean chart that is as well. You know, I like looking at that red line, the 40-week moving average, and it bounced off of it 2 weeks ago and sprung. I mean, what is that? A 15% gain in a week. You know, it's down this week, but not by much.
Yeah, and it's also still correcting from that unheard of bounce that it had. So it really reacted the way that we like to see a chart react to that moving average, and it's withstood everything that's happening. So really positive chart here. Our next one is Old Dominion Freight Line, and this is a transportation hub for manufactured goods in the United States. They've also seen a huge increase, 113% in the last 3 years, and again, just a really clean chart here.
Yeah, absolutely. I mean, same sort of action we're seeing here. It's right on that 40-week moving average this week. I would expect a bounce, and this is one great example of. There's a Warren Buffett quote that says you should be fearful when others are greedy and be greedy when others are fearful. This is a perfect example of, you know, let's jump on that greed while people are being fearful right now, because I suspect there's going to be a pretty big bounce upwards in this chart right here.
Yeah, and that's what we're hoping for. Is that where it is right now, that's a really good sign that it's either going to drop or it's going to bounce. If it bounces, we're in good shape. So
yeah, and the thing is too, you know, if you get in and it drops below that 40-week, you just get out. So if you're right, you get $10. If you're wrong, you lose $1. You know, the reward is way higher than the risk. So that's another thing I like about this one.
Absolutely. And then our last one is Cornet Digital Limited, and they are an international manufacturing company that's based in Israel, and they specialize in garments and textiles. So they're kind of filling in that retail gap that we've seen with all the stockpiles not being able to make it from China.
Yeah, I mean, more of the same here. Just looks like it could have a really solid bounce off that line. You know, it's come down quite heavy in the past couple of weeks, but I mean, this is a healthy looking chart. It had some good volume as well. There's vertical lines on the bottom before it took this dive. So it's good to see. So if you look at the bottom of the chart, there's the gray lines or the green lines and the red lines. The green lines are buying, the red lines are selling. And, you know, this selling action really hasn't picked up much. So that's more of a lack of buying than it is overloading selling, you know?
Absolutely. And what I like here about this one is it did drop, but it dropped after it had its last bounce here, and it's just dropped back to that line of support that we have right here. And it's not drawn in, obviously, but there is this flat line that it's following.
Right,
as long as it continues to follow that, we should see another
Yeah,
bounce.
right around $34 a minute. That's a clean horizontal line there.
Yeah, so if you had invested in these a couple of years ago for a $5,000 investment in the first company, you would have seen a $4,900 increase. And for the same amount invested in our second stock, you would have seen over $5,000 returned. And for our third, you would have seen over $8,000. And as we said, all of these are looking like they're going to bounce and continue on that trend for the next 3 years, and they have a good reason to with the current economy. So
yeah, absolutely. I mean, Leah, you've done such a good job at finding companies in this muddy market, I guess I would call it. But there are opportunities out there all the time. I mean, the money has to go somewhere.
Exactly.
You know, just because people are slowing down on spending doesn't mean they're not spending it at all. You know, it's not like spending has completely ceased. So definitely some profit opportunities here, and some great reasons why you should jump in on these stocks.
Absolutely. So I think that's all that we have for you guys today. But just remember, there are always opportunities, and we'll be here to find them for you. So thank you so much for having me, Jordan.
As always.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com, where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.